Hello, everybody, and thank you for joining us today with this new financial line seminar. Our guest today is Fabrizio Zennaro, who is a PhD student at Sapienza University, and it also works for the Bank of Italy. And Fabrizio today will talk about cryptocurrencies and digital currencies, the implication. And so I would like to thank Fabrizio for accepting our invitation. And so Fabrizio, the floor is yours, and we start the meeting. Thank you very much.
So thank you, Emiliano, and thank all of you for being here. And let me introduce myself, because I have a quite diversified study and work path that will be reflected also in the presentation. I studied classics, then I did a degree in economics and master in business administration. Now I'm doing a PhD in philosophy. In terms of working experience, I started as a business consultant, then I moved to in a small, medium enterprises, and then I joined the Bank of Italy. Today, I'm presenting in the role of PhD student, so any opinion expressed do not reflect the official policy of the Bank of Italy. But let's start, and let's see that we know that the future, now we are living a lot of its uncertainty, and the future, the digital money, is not pretty clear. So what I want to do today is to see some tools that could help us to at least exclude wrong assumption that could help us to move in a better prediction. For doing that, we will see digital money, what kind of innovation, and then the driving forces. So when we talk about technological innovation, it's common to think about the blockchain that allows an innovation in the form of payment that is defined with new digital money, so-called cryptoassets. But I want to reverse this position. To asset, basically. And it's a crypto asset. That is basically the common view. What I want to do is to reverse the reasoning and starting from the right, from the new digital money, and make analysis with the monetary elements. In that sense, what we can do is to understand what really are the new digital money, and so also to discover what kind of innovation is behind this digital money. Looking at the innovation, we are also able to see the driving forces. Just a little spoiler. The driving forces is not only technology, but there is also the supply forces and the regulation. And this is important because allow us also to see that there are additional forces that are indirectly effective on the innovation. I'm referring to the demand and the reflexivity. These influence the direct forces and then the innovation. So let's start our journey, and we start watching the monetary elements applied to the digital money. So the monetary elements that are represented here is ordered by increasing complexity. So let's go through each of them and see why are important in the analysis of the digital money. So the first one is the free economic function. that is ontologically also the definition of money. So money is when there is the medium of exchange, store of value, and the unit of account. Basically, we can say that there is a good money when these three functions are properly addressed. And why this is important for digital money? Because also new digital money have to address these three functions correctly. That's a very important point. Let's move to the second point, trust. In the past, the coin have intrinsic value, having done with gold inside. And that's the value, the trust that there is, the gold was giving the trust to the transaction. Then we move to the gold standard. The gold standard means that a piece of paper give a right to convert in amount of gold. After that, another new evolution of representation of money is the fiat money. In that sense, now there is no intrinsic value on the banknote, but there is the trust that in the future we will have the same purchase power. So having the same purchase power is achieved by the role of the central bank. Here, the main point is that trust is gold. So the trust in the purchase power is absolutely fundamental. Now we increase a little bit the complexity, and we are going to see the type of money supply. Because first, we have to define, to know that there is a public money and a private money. So the public money is issued by the central bank in form of banknotes that is available to retail, so to the citizen in a physical way. And then the central bank deposit that are digital, but the access is limited to the commercial banks. Then there is the private money, where the commercial banks issue the money with the bank deposit, and the electronic money institution, the electronic money. This form of money is digital. It's retail and it's digital. So the second important point is to see that there is already a digital retail money. So it's already available digital money. Okay, and it's issued by the private money. But here the main point is the monetary anchor, because this system is called two-tiered system, and it means that the private money is working well properly because there is the possibility to exchange in a public money. For example, when we go to the ATM machine and we withdraw money, we are exchanging the private money issued by the commercial banks in the public money issued by the central bank. This exchange at par, one-to-one, is the monetary anchor and allow the overall system to work properly. And now let's move to the fourth and more complex element, that is the money creation. The central bank issue money by printing banknotes and also by lending credit to the banks or purchasing financial assets to the banks. Then the commercial banks issue money, giving loans to households and businesses or purchasing financial assets from the private sector. This is important because when commercial banks operate credit, they work in a fractional reserve system, That means that only a small part of the loans is put as a reserve. And that kind of system allows to have maturity and liquidity transformation that is fundamental for the overall financial system. The opposite of the fractional reserve system is the narrow system. The narrow system, you give loan and you put the same amount of money in reserve. But this function will not allow the maturity and liquidity transformation directly by the commercial banks. Okay, that was tough, that's fourth element. But what we want to do is to using this framework, these four elements of monetary economy to see the innovation and the innovation in the digital money. So we will first see the private money, and then we will look for the public money. So when we talk about technology, is of course is one driving force of innovation. When we talk about Bitcoin, there is the evolution, the development of the blockchain, that is a distributed ledger technology in which transactions are performed and validated automatically by the technology, so without a third party. An evolution of the Bitcoin is the stablecoin. Stablecoin added to the transaction, automatic transaction, also the stabilization mechanism that pursues to have a conversion rate with, for example, a fiat currency at par. So stable refer to the value of this crypto asset against some other asset that could be, for example, fiat currency. Additional evolution of the technology and the use are the DeFi, but we will not cover today. So let's see using the four elements in the Bitcoin and then in stablecoin. So first, the free economic function is not performed by Bitcoin because, for example, the means of payment is not accepted for overall transaction, but only for a small part, and also for sometimes for illicit transaction. So it's not performing the three economic function as they have to do. Second, trust. The trust, it's an evolution because the consensus mechanism that I was mentioning before allows to make transactions between peers without the validation of a third party. And that is the real innovation. But again, the trust is not only in the transaction, there is a need of trust in the conservation of the value, and here is missing. Third element is the time of money supply. In this case, Bitcoin is private, so it is like the issuance of the private money, as we have seen. But there is a difference, because in the case of the Bitcoins, there are no user protections. That means there is no insurance on deposit, there is no surveillance on the issuer, and so on and so on. Also, the money creation is different because it's pre-established. So we already know that Bitcoins, we arrive to 21 million, and at that point it will be stopped. We issue new Bitcoin. That could create, in the long term, deflationary effects. So all of this to say that the case of Bitcoin is not a digital money, but is a crypto asset. That is something different. If we move to the stable coin, the things change, because when we talk about stablecoin, we talk about a universe of crypto assets with different characteristics, and so how these elements are effectively performed differ. So first, the three economic function depends. In some stablecoin, yes, it could be performed, especially in case of this stablecoin that are could be the same of electronic money. This is also foreseen in the new European regulation on crypto assets. The second, the trust, there is the stabilization mechanism, but also here the stabilization could differ. There are different types. So some stabilization mechanisms could work better, others could not, are not reliable. Third, type of money supply, also here is private. And here the accountability of the issuer depends on if there is a regulation under which these stablecoins are issued or not. And finally, the money creation also here depends, because an issuer could issue stablecoin in a way of a narrow system, which there is one stablecoin, one collateral in the same value that guarantee the stabilization, or could be issued by fractional reserve system. So the reserves are only partial correspondence with the issuance, and that proposed the problem of before. So how this issuance could be sure or not. So in terms of stablecoin, what we can conclude, that some stablecoin could be new digital money, but other types not. So the diffusion as a digital money depends also on other factors. I just mentioned one, that was the regulation, but we will see after. So this was the picture of the private money, and we will move to the public digital money. On this, we use again the slide of before, of the distinction between public money and private money, to highlight that the context is changing. From the supply, there is the emergence of stablecoin on the side of private money. And then there could be also the issuance of digital public money from foreign country, that is called foreign CBDC. From the demand, there is the banknotes reduction. So that is this is affecting at different speed overall in the world. But what is important to note with this changing context? That the monetary anchor could be mined, because if we have a reduction in the physical money and increasing of additional private money, also maybe not regulated or not directly under control, there could be this monetary anchor could not work as in the past. So for this reason, authority are thinking about to issue an additional monetary base, that is CBDC, central banking digital currency, that is not in substitution of cash, but it's an additional type of money issued by the central bank that has the characteristic to be public, digital, and for retail. This is strategically very important, and the strategy could vary from country to country. For example, in Sweden, they have a strong reduction in banknotes. So the needs of issuance of CBDC strongly correlated to this event. But again, I want to stress why the technology is not the only factor at play. When we talk about CBDC, two examples could help to easily understand what will be. CBDC could be as having a bank account at central bank. So it's having a bank account at the ECB or the Federal Reserve. It's not in our private banks. Or else could be also have the characteristic of a digitalization of the banknotes. That is different. Then could have additional characteristic, could be anonymous, not anonymous, could have interest or not. All these characteristics are really important, and particularly because they have impact in the conduction of monetary policy, financial stability, payment, and so on and so on. That's to highlight and stress the importance that it's not only the technology that played a role of innovation for digital money, but there are other elements. Let me conclude on the part of the public money, because there is an additional option that is called wholesale CBDC. Wholesale CBDC is the form of digital wholesale money that already exists. So why there is discussion on wholesale CBDC? Because there is the intention or the desire to have the programmable functionalities that are performed by the DLT technology. But also here, a solution could be to issue additional digital money for wholesale with a DLT, but also there is the possibility to develop programmable functionalities to the already existing infrastructures. You can see that also here, the technology is not the only factor at play. So we are arriving to the other driving forces, and I just keep a glass of water to keep the voice and give you just a few seconds to have the overall ideas. So, additional driving forces. In addition to the technology that we have already mentioned, there is the supply. In the digital networks, increase the competition between currency. And these have a lot of effects. But I want to stress one, that is the disintermediation. The competition push for disintermediation in order to increase the value of the services. So disintermediation means we remove one player on the value chain in order to have more value for the enterprises and for the user, for the customer. Disintermediation is a strong push to innovation. We have seen this in the DLT technology for the Bitcoin, but we have also seen the push of new solutions, for example, for the stable coin, for the use case of cross-border payments. So to solve the problem of cost of transaction cross-border. So this intermediation is a strong element of innovation. The other one is the regulation. We know that regulation pursues the good innovation by influencing the supply. So this is a circular effect, because regulation tries to influence innovation, and innovation adapt and generate new needs of regulation. And it's important to take note that this process is asymmetrical, because regulation is slower compared to the push of innovation to new solution. So regulation needs to be adapted continuously. The other force that I mentioned before that was indirectly important with the innovation is the demand. The demand, in fact, directly influences the supply. And this is really important because there will be the change of the features that could be desired in the future. For example, when we think about the type of instrument, of monetary instrument, we know that there is a banknotes reduction, so a decrease on demand of physical retail money, but there will be eventually also the coexistence with the CBDC of different type of digital retail money that could be issued both by public and by private. And this is a novelty. So knowing the demand and how it's important both for the public and the private. The last forces that I have highlight is the reflexivity. Reflexivity with the cause effect start from the regulation. Regulation, as mentioned before, try to push goal of good innovation. So it's desired good innovation, but there could be also the case of undesired or unexpected effects that are reflexivity. For example, when there is a regulation of crypto asset, there are the definition of different types of crypto asset. So any type will have a different regulatory burden, and this could affect the choice and the development from the supply to develop the solution. Also, not regulate could have a sort of reflexivity, because there will be regulation from other important economic areas that could affect in some way the development of the crypto asset. For example, a global stable coin, of course, should take in consideration the new regulation in the European Union. Because if I'm to have to be global, I have to be at least correspondent to the regulation in the Europe. So at the end, this is the overall picture. So we have 5 forces, 3 direct and 2 indirect, that influence the innovation: technology, regulation, supply, reflexivity, and demand. We should consider all of this to forecast the future. And going to the conclusion, let's use this framework to try to have some elements for forecasting the future. Now, the first is the technology will develop new type of digital money. Especially will be the case of the stable coin, so-called stable coin, that are in line with the regulation. So this kind of stable coin will have the opportunity to be used as for example, the electronic money. This is the case of the money token foreseen in the European Union. Then we have regulation that has an important characteristic, as mentioned before, is geographically diversified. So in some area there will be a regulation, in others not. And this will influence a lot how the crypto asset will develop and how the diffusion as a digital money will be. But also the reflexivity is important. And I mentioned the multiple regulation. That means in the same economic area, there are multiple regulation on the same topic. So it's for the payment, for the anti-money laundering, and so on and so on. So there are multiple regulation on the same topic. The coherence of this regulation is not easy and could eventually create some reflexivity effects that are generated by the supply. For the supply, I would like to underline that the market concentration will be extremely important, because the market concentration of the big players that could issue the global stable coin will affect the dominance of future digital money, the private digital money. And this is especially true when we talk about the so-called digital currency areas. And finally, the demand. The demand is important and is emerging when we think about an issuance of a CBDC. So here, marketing tools are needed to understand not only the quantity of money needed, but also the features the customer needs in terms of digital money. These tools should be available for the all kind of issuers. So I want to conclude with a takeaway that money is a means to an end. So is this really true? Is it really true that money is a means to an end? It's not obvious, the answer, because when we think about the euphoria for the so-called cryptocurrency, that, as we have seen in the case of Bitcoin, are not digital money, but a speculative, risky asset, the answer is not so obvious. But it's difficult to imagine that monetary elements would be known by the vast public, and that allow everybody to distinguish what is digital money and what is not. So for this reason, this question, broadly addressed to the society, in my opinion, is important. So thank you very much for your attention. I hope that I give to you some insight, some elements to understand and to forecast better what could be the future. For any question, you can write me an email, or the bibliography, or whatever you need. Thank you very much.
Thank you, Fabrizio, and thank you very much for your presentation. And we can now open the debate. So if there are questions coming from the audience, they can speak directly to the video, or they can raise their hands, and then I can make a list of the questions. Because I have questions, but I would wait for the audience. Yeah, otherwise I can break the ice and make a question to Fabrizio. So my question is, yes, it's about the future. And so let's put aside for a moment the Bitcoin, and let's try to focus on stablecoin and the digital currency of central banks. So do you believe that issuing these new monetary tools will improve the monetary policies of the central banks, in the sense that
Wow, mamma, è quasi vero. Bello.
do
No,
you believe, sorry, do you believe that this new technological currency will increase the speed of the monetary policies, in the sense that now a central bank has to wait for all the, indexes coming and statistics coming from the economy, and then they make the decision on the interest. And probably I'm thinking that probably this having a EU currency or a digital euro can improve, the connection between the central bank and the real economy, and speed and increase, the speed of the decision that the central bank can make. What do you think about it? I don't know if I'm clear.
Yeah, no, perfectly clear. It was an important debate since the beginning of the opportunity or not of issuing a CBDC. It depends on the characteristics of the CBDC, but it's important to evaluate the effect, because there was said that the importance of having a CBDC is important for the monetary anchor, so having the convertibility from from private to public. But having too much CBDC could alter the functioning of the system, of the two-tiering system. Remember that now the system is working when the commercial banks allow the credit to the public. So the private money is important for the functioning of the giving credit to the system. So in terms of quantity of CBDC, of the public money, could not be as much as possible, should be at least on same range. That's important. So the characteristic probably will be well weighted on this. So also, yes, it's possible with a CBDC to eventually give a direct impact of monetary decision on the retail. For example, if the CBDC would have or not an interest rate, but this will pose a lot of effect on stability, financial stability, and so on and so on. So the investigation phase that basically all the important central authority are doing is to correctly address these impacts.
Okay, thank you, Fabrizio. Yeah, we have a question coming from the audience from Francesco Antilici. Thank you, Francesco, for being here today with us, and you can make direct your question to Fabrizio.
Thank you. This was very interesting. So I'm very naive about this stuff. So, but my question is, I guess, is this a kind of situation where we could just stand back and let the market sort itself out? Or is this kind of situation where instead we need to intervene and try to steer it in a specific direction, because otherwise there could be problems? And if so, what could those problems be? Like, what do we need to watch out for? Yeah, that's the question.
Okay, yeah, that's a really good question. In terms of the private market, the European Union developed the market in crypto asset regulation that is with the objective of driving the innovation along a desired way. There are other countries, for example, China, there is a prohibition of using Bitcoin, also India. And so how to act on this scenario is different. The same, the issuing of public digital money has to be, repeat, well weighted and balanced in the situation. But it's strategically important country by country, because in some countries there are some effect, some new context. In others there are others. So also, I hope I can answer to your question, but it's pretty difficult. Also, not doing could be a decision with effect, because as I mentioned before, the context is changing, so the balancing of the system that work properly now could change. So it's important that overall the monetary system will perform correctly.
So thank you, Fabrizio,
Thank
and
you.
thank you, Francesco. I don't know if there are other questions coming in from the audience. Yeah, Sandro Belvisi. So thank you, Sandro. And yeah, the floor is yours.
Fabrizio, the question is, you talk about regulation and different layers, the same regulation, and money is quite global, no? So how can you achieve financial stability and political stability with national regulation, or how much should that be global? I mean, how do you see that?
Okay, this is probably the biggest challenge, because as mentioned before, the digital networks and the platform allow to the competition between currencies. So the authority over all the world are also trying to define common line of basic rules that could allow them to work properly on their economies. So I think you got one point, that managing this phenomena could not be done only nationally, but needs an international collaboration, and in order to develop, to use this opportunity as a pursue development and growth and a good economy. But yeah, there are indeed some activities for this for reaching this goal.
Thank you very much.
So thank you, Sandro, and thank you again, Fabrizio. And I don't know if there are other questions coming from the audience. So otherwise, I mean, maybe I have a final question for Fabrizio. I don't know if there is time for this.
Sure.
So my question is about, I mean, your takeaway. So money as a means to an end. So probably, especially for the cryptocurrencies, the end is crucial in the sense that the goal that we would like to achieve is essential to define the features and the characteristics of the digital money they would like to set up, implement into this new stuff. So, in that sense, what I'm saying is that the design of the I'm not saying cryptocurrency, but I mean of the digital euro, for instance, depends on the goal that we would like to achieve. And so, what's the goal? That's my question. What is the main goal that I mean the AUE or the central bank is trying to achieve? And probably different goals can produce differences in the main central banks in the world. For instance, China, America, and Europe. So maybe we will have a slightly different currencies based on the goals that they would like to achieve. I don't know if it's clear.
Yeah, I can say that for the central bank, the goals are pretty clear. For example, the correct functioning of the payment system. So issuing or not public digital money is relevant for this, for the financial stability and for the conducting of monetary money. So for the central bank, the answer is focusing on their objective of that are defined by statute. What I wanted to underline with the final statement was to stress that we have talked often, we have heard a lot of cryptocurrency, currency as a new money, and that's not money. And all the value, and this is my opinion, is based on the confusion of that what is money, and money as a good money as is liquid and as no risk. A Bitcoin has a lot of risk because it's volatile, for example. So if there is not, if people think that Bitcoin is a cryptocurrency, it's a money, and they buy it because of having in mind that could be reevaluated and generate very returns, I think the answer is clear that they don't think it's, I mean, it's to an end, but it's an end itself to create value. That was my point.
Okay, that's clear. Yeah, thank you. And so yeah, it helps understanding, I mean, what's going on. Yes, and yeah, we have another question from Francisco Pilisi. Thank you, Francisco. Yeah, you're muted.
Sorry about that. Yeah, just to follow up on this. So like, again, I'm very naive about this stuff. I don't know what we should expect about the future. So for example, is Bitcoin or so-called cryptocurrencies, are they here to stay? Or is it possible that people will just be put off? You know, because for example, I heard that lots of people were buying Bitcoin because it was growing in value. And then at some point it crashed. So lots of people lost lots of money. Could something like this put people off? And so could Bitcoin lose its attraction and eventually disappear? Or is there something that is in one form or another is bound to stay? That's the question.
Okay, thank you, Francesco. I try to answer with 2 points. The first point is that Bitcoin is now retained also in terms of store of value. So it's not important to say that it's not remaining as a money, but as another function, as an asset, a digital asset. That is difficult. So in that sense will remain the Bitcoin. That's the point I want to say. And that's it. Yeah.
Yeah, thank you. Thank you, Fabrizio.
No, sorry, Milano. And I remember the second point. Second point was that the crypto asset as a whole, we can include also the stable coin, right? So the stable coin could eventually develop and consolidate also as a means of payment. For example, if we consider the MiCA regulation, there are some stable coin, so-called stable coin, but are called in a different way, e-money token, that could have this function. So in that sense, some crypto assets, specific crypto asset could remain maybe also with the function of payment. Hope I have answered to your question.
That was very clear. Thank you.
Thank you.
Okay, I don't know if there are other questions. I mean, otherwise, we can stop here and thank again Fabrizio for sharing his thoughts and expertise on this subject. And so, thank you, Fabrizio. Thanks everybody for joining us today, and I hope to see you in the next meeting of the Finance Online seminars. And okay, bye.
Thank you. Bye.